All right, good morning. Welcome to Market Pulse this Wednesday. And of course, today we're looking and having a conversation at private equity investment in Africa and in Kenya, looking at some of the FDIs that have been coming into the country. And recently, Deloitte Africa released the Deloitte Africa Private Equity Confidence Survey. And to help me understand what was contained in that survey, what were some of the key findings out of that survey, I'm joined this morning by Kevin Kimotho, Deloitte East Africa private equity leader. Kevin, welcome to the program.
Thank you, and nice to host me.
All right, so first things first, just looking at the report that has been released, the question that of course comes to mind is, what are investors feeling? Where are the investor sentiments at the moment?
Jimmy, to respond to you, let me first say that the Deloitte Africa Private Equity Confidence Survey is a survey that we have been running for over 10 years, and this year we have seen increased respondents, and on the basis of that, we think we are confident of the insights that are in the report. The report really tries to capture the sentiments of private equity practitioners over the next 12 years, largely around the economic climate, the investment climate, things like the sector focus areas, and also lastly the fundraising environment in Africa. The 2024 survey, what it has shown, despite the global economic challenges, most of the respondents, about 62%, are of the view that there will be increased PE activity in Africa. This is largely driven by some of the larger economies. I think Africa globally is a front runner in terms of economic growth, and in that sense, it's still a hotspot for investors, even despite these global challenges.
All right, just looking at the report itself and some of the comments that have been made by the Ministry of Investment, one of the things that they say is that there has been a surge, particularly as far as private equity investments in Kenya go. And the question therein is, what is driving this surge?
So the surge is largely driven by the anticipated economic growth in Kenya in general, and also in key sectors. The report, if you look at the insights that we have, is we still anticipate quite increased investment in your financial services, manufacturing, and agribusiness, largely, and this is the same trend that we see across Africa, and also slightly followed by healthcare. But the key sectors in this case, manufacturing, agribusiness, and manufacturing, agribusiness, life sciences, and healthcare are some of the key sectors that are a hotspot for investors. What I would say is there has been a lot of investment in this space, and then secondly, if you look at most of the PE activity in Africa, it's to the medium-sized enterprises, which are largely your smaller manufacturing enterprises.
All right. Initially, the sector that we saw attracting a lot of capital from private holders of capital was largely the fintech space. And I just want to know, has there been a shift into, let's say, areas like agriculture, or are we still seeing a lot of investors looking at the fintech space or tech-related spaces as viable investments?
So what has happened is, Africa is one of the most mature fintech continents, largely due to its large population, and also there's been a lot of innovation with the advent of increased internet penetration. And what we have seen, we have seen increased deals in this space. Average deal sizes have also shrunk in view of some of the global challenges, and in that case, you see a lot of interest in the fintech space. There have been quite a number of successful fintech investments in the recent past, which then gives credence to the increased appetite for investment in the fintech space. But that's not to say that this is going to replace is going to be replaced by agribusiness and the likes. No, if you look at our survey, the key top sectors, as I mentioned, was agribusiness, financial services, and and manufacturing. So if you look at the financial services space where you'd anticipate most of your fintechs will sit, we see also there has been increased focus in that space. Many of the Ps that we look at may not be straight line financial services or banking investors, but then they would especially your likes of venture capitalists, you'd see a lot of them in that innovation space, where the fintechs would lie. But I think all this is really driven by tech, internet penetration, and also the large populace in Africa.
All right, so Kevin, looking at these investments, how are they reshaping the kind of startups that we are having in the country and the kind of elements and commercial viability of these companies that Kenyans are coming up with and these ideas?
So I think the ideas, if you look at the ideas, most of them are largely driven by the demand in either specific sectors or specific economies, and how this private equity is shaping what I would call the Silicon Savannah, is that you get a lot of now. There has been increased interest, especially for tech entrepreneurs, in view of some of the success stories that we have experienced with some of VC investment in either platforms, the e-commerce space, and we always talk about the M-Pesa story being the largest fintech in Africa. And I think that has given a lot of credence. But what it has done is that it has given credence to the fact that there's now a market. There's already a market for this kind of investments. And we can only tell with time, because yes, you have a lot of we've only seen a lot of recent PE investment in that space, but then I think the true test of time, we'll know this with the true test of time, especially when they get to what I'd say their times of exit. Unfortunately, if you see what again we have seen in the market, there are a number of fintech players that are struggling or have struggled in the past. Some of the challenges that they have faced, some are already going through restructuring and the like. So it is probably, we'll probably see it in the next 3-4 years, whether or not there have been very increased success stories in that fintech space.
Kevin, one of the things that we have suffered from in the recent past, and particularly looking at the late last year into early this year, was sort of a confidence crisis from investors. We saw what was happening with at the NSC, where we saw a lot of FDIs stalling and a lot of foreign investors leaving the market. So looking at the PE space, and the question that comes to mind is, has that confidence been restored, and are we still likely to see, how are we faring compared to our neighbors in Rwanda?
So I think, so in response to that, I think what we have seen is that the global challenges that we are experiencing are the ones that have resulted in that decreased appetite, largely at the bourse or in most capital markets in Africa. But then, that notwithstanding, if you look at what private equity professionals mention, or the sentiments that we have, is that there's anticipated increase in PE activity, and this is largely because of the the growth focus in Africa are still some of the highest globally. So that then means that Africa is still a hotspot for capital deployment. So in response to that, what it does is just shows that private equity is a very lucrative, is a very profitable investment class, alternative investment class, as opposed to say what we have in the capital markets. But then that doesn't really signal that a lot of capital has moved out of say capital markets into private equity. I think the key thing is that private equity, even with the current environment, is able to generate a very good return for investors, and in that sense, then it's not watered down as what we've seen in the capital markets. I think the other thing that I wanted to mention is that if you look at what respondents in the 2024 private equity confidence survey state, there's now increased fundraising activity in Africa, and this is largely driven by the prospects, economic prospects, especially in East and West Africa, where you'd still anticipate double-digit returns for private equity firms. And that is unlike what we saw last year. But this is largely because of most of increased political stability in these two regions, East and West Africa.
All right, so as we're having this conversation, one of the things that I am thinking about is SMEs in Kenya. What do they need to do to be able to make themselves a viable investment for a lot of these PE firms?
So this is, I'll first say that it's really a journey for many of these medium-sized enterprises. Key thing for attracting PE capital is really consistency around returns, consistency around governance, consistency around both ensuring that the business model is one that can actually stand the test of time. But if what we are seeing, especially some of the sentiments that we have, is deal sizes are now shrinking. You're seeing a lot of PE firms investing in deals below 25 million across Africa, and that's where medium-sized enterprises sit, and that is really driven by the higher returns that you'd expect for these medium-sized enterprises, and also the larger, more established enterprises are yielding lower valuations or lower returns, unlike medium-sized enterprises where you have lower entry valuations and higher returns, when the work is done in many of these medium-sized enterprises.
So, Kevin, am I hearing you to say that SMEs potentially could be the areas that a lot of private equity firms are looking at?
Definitely, especially in our region, in Kenya and East Africa, that is really still one of the most favored investment or targets in the SME space. Yeah. And if you look at the growth in number of deals, I think in last year we had almost 600 million worth of capital deployed across Africa. Most of this went into medium-sized enterprises. With the increased urbanization in Africa, with the push for manufacturing in Africa, then capital will still will follow suit, and in that case, then medium-sized enterprises become quite demanded by private equity companies.
All right, so from the report, one of the concerns that I see, and although a lot of these PE firms are cautiously optimistic about the future of investments in sub-Saharan Africa and in East Africa and Kenya particularly, but there is a concern around policy and the question about being able to repatriate a bit of your profits back to the country of origin. And I just want to understand what is happening within that space and how are these PE firms managing those challenges?
So if you talk about regulations, I think in terms of regulation, we've seen increased collaboration between capital markets authorities in Kenya and Uganda with especially the East African Venture Capitalist Association around certification of investment professionals, and also the issue around reporting. I think it's still a journey, but it's something that we would anticipate will happen in the near term. Speaking about repatriation of profits, I think the one that really comes to mind is Ethiopia, where we have seen historically there has been a challenge for many of the investment practitioners. But then what you see with the recent enactment or Ethiopia moving to a market-based foreign exchange regime, you'd anticipate that there will be currency stability in Ethiopia, and as such will increase the attractiveness of Ethiopia, especially in terms of repatriation of profits or dividends. I think it's really a way to see, because these are really recent developments. But you know, the immediate, our immediate view is that you will see increased PE activity back in Ethiopia, largely because of the attractiveness now from a profit repatriation point of view.
All right, the other thing, of course, has been the question around currency, and the currency volatility within the FX market. And the question then that I would want to know, has this worked to the advantage of PE firms or to their disadvantage when they're looking at areas or companies to invest in?
So you see, currency is really a factor of the economies, and I would say especially in the last 24 months, some of the currencies in key markets, in this case, the likes of Nigeria, Ethiopia, as I've mentioned, you know, we've seen a bit of volatility with that. I think that the key thing about currency, it doesn't really help with that volatility, especially for PE firms in anticipating or in anticipating returns. So you may say in that end that it is a challenge, but then largely we have seen, especially in this year, there has been a bit of stability and economic stability in the large economies, and from the report or from the respondents, you know, Kenya in East Africa, Nigeria in West Africa, Tunisia in North Africa, South Africa in Southern Africa are the key hotspots. And you will see outside, say, Nigeria, most of these economies have had relatively stable foreign exchange. So you would say the more stable the currency, the more attractive those economies are for any investor, or in this case, private equity investors.
When you look at the amount of PE capital, the amount of capital that was deployed in Kenya in the last year, looking at 2023, which is where the report focuses largely on, do you feel that capital is sufficient? Are we operating optimally, or that capital could increase going into 2024? So
I think if you ask me, you know, we are still undercapitalized for many of the businesses. We still have a long way to go if you look at some of the developed countries, especially from a private equity point of view. But then I'd say Africa, even in East Africa, has made a lot of strides. Noting that deal flow in Africa has grown double-digit, you know, over the last 10 years. I think it really has been a case of, one, how many investment-grade opportunities have been there. You know, there was, say, a certain cadre level of investment that many of these private equity firms were looking at, you know, which has now necessitated a lot of rigor, especially from a DD, due diligence, to look at some of, say, the smaller size, especially family-owned, medium-sized, small to medium-sized enterprises. I think what has really helped has been, you know, the success stories, especially with the exits that we have seen out of medium-sized enterprises that have received private equity capital and have then generated good returns for the limited partners in those PE funds. I think with more and more of these success stories, we'll see increased deployment of capital. But what I would say, you know, I think we are still a long way. The potential is much more, and which give credence, you know, to what respondents have said around there's anticipated increased PE activity in East Africa and in Africa in general. About 62% anticipate there'll be increased PE activity. But I think all this is largely driven by, the high economic growth prospects for most of the East African economies.
All right, so let's talk figures for a minute. So you're talking about 62% growth. This is just in terms of capital that is likely to come into the African market. So the question is, how much are we looking at cumulatively, including that 62% growth?
Wow. So I think it would be would I have that number top of my mind? But you'd have. You see that the private equity capital, you're competing with a lot with your banking, especially your banking. I think for Africa, you'd almost need the total value of capital deployed to be about, of equity capital deployed to be about, 30% of total capital requirements, because we need to replace a lot of what the banks are already offering. Yeah. So you'd probably look at in East Africa anything from around $2 trillion. Yeah, 2 trillion. Yeah, from 600 to 2 trillion. Yes.
All right. So. And that's quite a colossal amount. But again, we're looking at, and I just want you to help us zero in on Kenya and look at the deal sizes and the amount of capital that is being channeled towards the kind of deals that are being attracted to, that are attracting PE firms in Kenya. That just maybe you can take us from the biggest deal size that you have seen over the last year to maybe the smallest, and where you see a lot of PE firms expressing interest.
So in terms of deal sizes, I think what we have seen is most of the respondents will play within the deal sizes of below $25 million. And I think that's where most of small and medium-sized enterprises, especially in Kenya from a capital requirement point of view, will play. What we have seen, based on, the deals that we have seen, most of the deals from a PE point of view in Kenya, in the region of about $5 to $10 million. We've also seen, say, that the larger deals, but most of them, especially for the small and medium-term enterprises, are in the region of five to I would say $20 million for Kenya and East Africa. All
right. So again, in closing, Kevin, just looking at the reservation from these owners of capital, and particularly in Kenya, what are they most concerned about?
Yeah, so most of them are concerned about, the regulatory environment, macroeconomic indicators in many of the economies. I think you see a lot of, especially majority of the economics, especially in Africa, a lot of fiscal changes. Yeah? Tax regulations are changing every year, and from a pricing point of view or a valuation point of view, it becomes increasingly difficult. I talked about most of the political and macroeconomic environments across key geographies, key economies in Africa, affecting the demand or attractiveness for capital. So that again really affects or determines attractiveness or for capital deployment by private equity firms.
All right, and what are you most optimistic? Just looking at the remaining half of 2024, what are you most optimistic in as far as capital deployment goes?
I'm optimistic that you will get very local entrepreneurs receiving private equity capital to grow their businesses, to generate returns, which then helps empowering our economies. Yeah. And also really, again, for the private equity professionals to generate returns for their limited partners or their investors as well, so that then private equity becomes a source of economic growth for the economy, and also a generator of returns for investors.
All right, do we know the subsequent jobs that have been created because of the capital that has been deployed? Because I was perusing through the report yesterday and I didn't see a figure.
No. Okay, so I think that's something that we could try and call out in our reports, but you'd anticipate that there has been job increases across various targets that have received private equity funding. Yeah. But then at the moment, it would be premature for me to give a figure. But what I would say, a lot of, if you look at some of where a lot of capital has been deployed in the recent past, financial services, manufacturing, really there has been also increased employment in these sectors. I know the issue of employment, again, there are a lot of question marks, especially around with increased innovation, whether then you'd anticipate increased labor. But then that notwithstanding, any time there's increased generation of returns, you'd anticipate likewise employment will also increase.
All right, Kevin, I think that's a good place to end it. And of course, that is Kevin Kimotho, Deloitte East Africa private equity leader. And that is all the time we have for you here on Market Pulse. Of course, you can watch this show every Wednesday on Citizen Digital. You can catch the full episode on Hot 96 as well. That's all the time we have for you. Let's do this again. Same time, same place next Wednesday.